The goals are our tradition.
This is India's #1 news network, and you're watching News 9. English news as it should be.
Good morning, you're watching News 9. I'm Karthik Malhotra. On the show this morning, we will bring you the latest jibe again from Donald Trump speaking at the UN General Assembly, calling China and India responsible for funding Russia's war in Ukraine. We'll bring you an excerpt of that speech on the show this morning. Also on the show, the H1B visa application fee hike as high as $100,000. Some are calling it a GCC opportunity for India. But can India clinch it? We'll discuss on the show this morning. You're watching Morning Brief at 9. This is Morning Brief at 9. First up, let's bring you all the global stories that we are tracking for you this morning, especially those coming from the UN General Assembly. Take a look at the headlines. In his first UNGA address since returning to office, Donald Trump slams China and India as Moscow's top financial backers through oil purchases. Donald Trump also uses his UN speech to lash out at Europe migration and climate change, calling it a con job. Also blames the UN for failing on Gaza as well as Ukraine. But in a stunning reversal, Donald Trump says Ukraine can reclaim all its territory from Russia following his talks with President Volodymyr Zelensky in New York. U.S. Secretary of State Marco Rubio warns Russia that Trump will impose costs if Moscow continues its aggression. Says the president's patience to end the Ukraine war will not last forever. Meanwhile, Ukraine's President Volodymyr Zelensky accuses China of backing Russian aggression at the UN, demanding Moscow end its invasion and return to peace talks. European Union chief Ursula von der Leyen says Europe will end Russian oil imports by the end of the year, echoing Trump's call at the UN and piling pressure on Moscow. South Africa's President Cyril Ramaphosa says he is negotiating with Washington to ease Trump's tariffs, warning against trade being used as a global weapon. A rare U.S. congressional visit to China focuses on Boeing deal. Plane maker reportedly in talks to sell up to 500 planes to China. U.S. drug maker Kenvue shares rebound 7% after analysts dismiss Trump's Tylenol autism claim, citing no scientific evidence to support the president's remarks. Let's start first from the latest that we are getting with respect to the US-India Strategic Partnership Forum on Tuesday. India's Commerce Minister Piyush Goyal outlined India's ambitious clean energy goals, aiming to more than double its capacity from 250 gigawatts to 550 gigawatts within the next 5 years. He highlighted India's robust national grid, half of which is renewable, providing unmatched stability and resilience, key factors attracting US companies to set up data centers here in India. Goyal also emphasized India's thriving talent pool and innovative startup ecosystem, driving global advancements in clean energy solutions and reflecting Prime Minister Narendra Modi's long-standing vision for sustainable growth.
India has a very big advantage which not many countries can offer. We have an integrated national grid. So even today as we speak, we have a national grid of 500 gigawatt, half of which is renewable, and offers you much more resilience, much more stability. It ensures that the demand at different points of time in different parts of the country will get socialized. And I think this is a very important element for those from the US who are looking to set up data centers in India. Because that presents...
So data centers from US investments to be set up in India. That's a word coming from Piyush Goyal speaking at that US-India Strategic Partnership Forum in the US. Meanwhile, US President Donald Trump has accused China and India of being the main financial backers of Russia's ongoing war in Ukraine by continuing to buy Russian oil. Now, speaking at the UN General Assembly in his first address of his second term, Trump also blamed NATO for funding the conflict. He insisted that the war would not have started if he had been president at the time. This comes just weeks after the US imposed an additional 25% tariff on New Delhi for its purchases of Russian oil, raising the tariffs to 50%, now among the highest in the world. Listen in.
China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy and Russian energy products, which, as you know, I found out about 2 weeks ago, and I wasn't happy. Think of it. They're funding the war against themselves. Who the hell ever heard of that one?
And staying with US President Donald Trump, who also launched sharp criticism at the United Nations and Europe during his first UN GSP since returning to the White House. He warned migration is driving Western countries to hell. He dismissed climate change as a con job. Trump also blamed the UN for not supporting his peace efforts in Gaza and Ukraine. In fact, his complaints extended to issues with a broken escalator and teleprompter at the UN headquarters in New York. Take a look at this report.
U.S. President Donald Trump's speech to the UN General Assembly on Tuesday included scathing criticism of the United Nations.
What is the purpose of the United Nations?
A warning to Russia.
The United States is fully prepared to impose a very strong round of powerful tariffs.
And a dismissal of climate change, despite scientists saying it's real and getting worse.
It's the greatest con job ever perpetrated on the world, in my opinion.
The 56-minute speech was a rebuke to the world body and a return to form for Trump, who had routinely bashed the UN during his first term as president. Trump also argued for lower levels of global migration, offering his U.S. immigration crackdown as a case study for what he believes other world leaders should do.
It's time to end the failed experiment of open borders. You have to end it now. See, I can tell you, I'm really good at this stuff. Your countries are going to hell.
Human rights advocates argue the migrants are seeking better lives. Trump claimed he has resolved wars around the world with no help from the global organization.
For the most part, at least for now, all they seem to do is write a really strongly worded letter and then never follow that letter up. It's empty words, and empty words don't solve war.
He gave a thumbs down to efforts by world leaders to embrace a Palestinian state, a move that faces fierce resistance from Israel. Trump did call for the return of hostages taken by Hamas and said the United States wants a ceasefire for hostages deal that would see the return of all remaining hostages, alive and dead.
We have to stop the war in Gaza immediately. We have to stop it. We have to get it done. We have to negotiate. Immediately have to negotiate peace.
Trump's warning to Russia was his latest attempt to pressure Russian President Vladimir Putin.
It's not making Russia look good. It's making them look bad.
He has talked about the possibility of sanctions on Russia several times, but has yet to follow through. Lately, he has demanded Europe stop all Russian oil purchases before he will take action.
And more stories from the US. President Donald Trump made a surprising change in tone on Tuesday, announcing on his Truth Social account that Ukraine can reclaim all its territory from Russia in an astonishing turnaround on the war after meeting Ukrainian President Volodymyr Zelensky. Now, Trump's suggestion that Kyiv could win with financial support from EU and NATO marks an extraordinary shift after months of saying Ukraine would likely have to cede land to its larger neighbor, Russia. In a further jibe at Moscow, Trump also called for NATO countries to shoot down any Russian fighter jets violating their airspace, following a series of incidents that have rattled US allies in Eastern Europe.
Well, the biggest progress is that the Russian economy is terrible right now. It's, as you know, it's crashing. And that, frankly, Ukraine is doing a very good job of stopping this very large army.
And U.S. Secretary of State Marco Rubio warned on Tuesday that President Donald Trump's patience to end the Ukraine conflict isn't infinite. He said a point will come when Trump will impose costs for Russia's continued aggression. Rubio spoke at the UN Security Council as Trump took a tougher line on Moscow at the Unga earlier in the day, saying Kyiv could retake all occupied territories and urging Ukraine to act now as Russia faces another major economic trouble. Here's Rubio's statement.
Done everything we possibly can and will continue to do everything we possibly can to bring it to an end. Very generous offers have been made. For example, a ceasefire at the current lines of contact, while all the other details on the future of the conflict could be worked out in terms of future territorial lines. The president has shown extraordinary patience in terms of not assessing additional sanctions in the hopes of having a breakthrough in this regard. He's very committed to peace, but his patience is not infinite. And as he has said repeatedly, he has before him the opportunity and the options of imposing additional economic costs on the Russian Federation if necessary in order to bring this to an end.
Russian President Volodymyr Zelensky, meanwhile, criticized China for backing Russia's aggression at the UN Security Council meeting on Tuesday. He demanded Moscow must end its invasion and return to peace negotiations. Listen in.
I met with President Trump just now, and we spoke about how to finally bring peace. And we discussed a few good ideas, and I hope they will work. And I'm grateful for this meeting. And we expect America's actions to push Russia toward peace. Moscow fears America and always pays attention to it. If China truly wanted this war to stop, it could compel Moscow to end the invasion. Without China, Putin's Russia is nothing. Yet too often, China stays silent and distant instead of active for peace.
Meanwhile, European Commission President Ursula von der Leyen joined global criticism of Russia on Tuesday, announcing Europe's goal to stop buying Russian oil by the end of the year. The statement echoes the US President Donald Trump's recent speech at the UNGA, reinforcing pressure on Moscow amid the ongoing conflict. Listen in.
Trump is absolutely right. We're on it. We have reduced already massively the gas supply from Russia, completely gotten out of Russian coal, and massively also reduced the oil supply, but there's still some coming to the European continent. So what we do now, we put sanctions out to those ports where, for example, LNG is coming from Russia. And we want to put tariffs on oil supplies that are still coming to the European Union. So we are really getting, after the last bits of oil and gas coming from Russia to the European Union, we want to get rid of it.
Meanwhile, South African President Cyril Ramaphosa said on Tuesday that he's negotiating with a US trade representative to reduce tariffs imposed by President Donald Trump. He warned of trade being used as a weapon globally, stressing the importance of extending the African Growth Opportunity Act for economic stability. Listen in.
And also the tariffs that President Trump is seeking to levy on us and has already started to be reduced. And that AGOA treaty should continue. And we are now involved in negotiations with the United States Trade Representative to see the extent to which we can reduce that.
And from UNGA and all the action there, let's move to the action on Wall Street. U.S. stocks ended lower on Tuesday after Fed Reserve Chair Jerome Powell said the central bank must balance inflation worries with signs of a weakening job market in upcoming interest rate moves. More details in this next report.
U.S. stocks finished lower on Tuesday, with the Dow dropping about 0.2%, the S&P 500 shedding more than 0.5%, and the Nasdaq losing about 1%. Federal Reserve Chair Jerome Powell offered few clues as to when the central bank might next cut interest rates. The Fed reduced rates last week by 0.25 percentage point in what was its first rate cut of the year. Carol Schleif is chief market strategist at BMO Private Wealth.
The stock market today, I think, is doing a bit of a natural take a breather after the sprint it's been on in the last few weeks in particular. I would suspect some of today's market action, too, is people knew that Chairman Powell was speaking at this around noon, and they were wanting more clarity, the sort of clarity we got out of Jackson Hole. And instead, we got the sort of mixed message that we got out of the last FOMC meeting. So that's partly, I just think people are they're drifting around a bit looking for the next news item to attach to.
Tylenol maker Kenvue's stock bounced back on Tuesday, rebounding from a record low hit in the previous session. Investors noted the lack of new scientific evidence in President Trump's press conference a day earlier, in which he claimed a link between autism and Tylenol use by pregnant women. Other notable stock moves included AI darling NVIDIA, which shed more than 2.5% after rising the previous session when the chipmaker said it plans to invest up to $100 billion in OpenAI. Shares of Amazon, Microsoft, and Apple also closed lower. And shares of Micron Technology rose over 2% in extended trading after the memory chip maker forecast first-quarter revenue above market estimates, betting on booming demand for AI hardware to boost its sales.
Moving on, a group of U.S. lawmakers made a rare trip to Beijing and discussed a deal with Chinese leaders for China to buy more Boeing jets from the U.S. Bloomberg reported that Boeing is in talks to sell as many as 500 planes to China, which would be a major win in the world's second-largest aviation market. More details in this report.
US lawmakers talked up the potential for a big Boeing deal during a visit to China. They said they raised the prospect with top Chinese leaders for Beijing to commit to buy more Boeing jets. Bloomberg reported last month the US playmaker is in talks to sell as many as 500 jets to China. It would be a major breakthrough for the company in the world's second-largest aviation market. Orders have stalled in China due to trade tensions with Washington. US Democratic Representative Adam Smith is with the bipartisan delegation.
It's been a while since Boeing airplanes have been sold here in China. We'd like to get that deal done. And I think that's all across the United States, not just those of us from the state of Washington. It's good company, good product. Hope to get back to them selling airplanes to China.
The visit began Sunday and marks the first House of Representatives delegation to China in 6 years. It follows a Friday conversation between President Donald Trump and Chinese leader Xi Jinping. That as the world's two largest economies look to improve relations beyond their current tariff truce. The US ambassador to China, David Perdue, said he thought negotiations over the Boeing deal had entered their last days or weeks. Boeing is one of the largest US exporters and historically sent around a quarter of its planes to China, though it hasn't secured a major Chinese purchase since Trump's first term in office. The lawmakers met China's second-ranking official Li Chang on Sunday, and with more leading Chinese figures on Monday.
Well, a tie-up between two of the highest-profile players in the global AI race is on the way, and so is the future of the electric planes taking off and landing vertically. Our next report rounds up some of the biggest tech headlines of the week. Take a look.
From the latest manoeuvring in the global AI race to the electric aircraft reaching for the skies. This is Tech Weekly. A tie-up between two of the highest-profile players in the global AI race is on the way. NVIDIA is to invest up to $100 billion in OpenAI and supply it with data center chips. The deal gives chipmaker NVIDIA a financial stake in the world's most prominent AI company. The investment gives OpenAI the cash and access it needs to buy advanced chips that are key to maintaining its dominance. But rivals of both companies may be concerned the partnership will undermine competition. Meta has launched its latest smart glasses, and they are its first consumer-ready spectacles with a built-in display. Dubbed the Meta Ray-Ban display, they will go on sale later this month, priced from $799. Boss Mark Zuckerberg presented the new gadget at the firm's annual event for developers in California.
The display is large enough to watch a video or, read a thread of messages. It appears in one eye, it's slightly off-center so it doesn't block your view, and it disappears after a few seconds when it's not in use so it doesn't distract you.
Huawei has outlined its long-term chip plans for the first time. It said it will launch some of the world's most powerful computing systems, underscoring China's drive to wean itself off foreign semiconductor suppliers like NVIDIA. In an announcement that broke years of secrecy about its chip business, Huawei detailed timelines for its Ascend artificial intelligence chips and Kunpeng server chips. Two Chinese companies, WeRide and Pony.ai, say they will partner with local firms to launch robo-taxi services in Singapore. The city-state is expanding into autonomous driving. Ride-hailing operator Grab said it would also partner with WeRide to begin services next year. Brazil's Embraer could get certification of its electric aircraft in 2027, although the new president of the country's aviation regulator told Reuters he would like to hit that milestone a year earlier. Embraer's subsidiary Eve is among several firms developing battery-powered aircraft that can take off and land vertically to ferry travellers on short city trips.
Now let's slip into a very short break, but the advanced decline ratio looking fairly negative on the Nifty 50 heat map this morning. Profit booking coming on account of auto stocks, and investor confusion on IT continues to play heavy. We'll bring you all the details with Rohit Srivastava, who will join us with his market view on the other side of the break.
पेंटिंग में पहली बार बिरला ओपस एश्योरेंस। 1 साल में पेंट को कुछ भी हुआ तो पेंटिंग वापस करके देंगे। रजिस्टर करो birlaopus.com पर।
Love is nothing without the thrill. Unlimited love. The B6 Pack 2 starts at 21.9 lakh.
Breaking news. Major disruption is expected this week.
Yes. Disruption confirmed. That's me. Relax. No scams. No scams. Just my brand new show. News Cosmic with Cyrus.
पापा इससे पहले जो चलाई थी वही ले ले।
चलती बढ़िया है। कुछ कह रहे थे?
नहीं, इनकी सर्विस में डाउट था ना।
सर, ओवर 300 टच पॉइंट्स, 170 सेंसिटीज।
हाँ, पर इन्हें सिर्फ 25 ही साल हुए हैं।
तुमसे तो ज्यादा ही है।
Skoda Fan Fest is live. Walk in today for a test drive and avail exciting benefits.
It worked. पापा मान गए।
Skoda. She'll leave when she has a kid. Does she even want this?
Women don't scale companies.
She's okay for support roles.
When do we stop asking if she's ready?
Women-led development is the panacea for the world.
Welcome back. You're watching News 9. This is Morning Brief at 9. Let's bring you all the action from the Lal Street, which opened just a few minutes ago. And it seems to be a somber mood once again. Markets opening in the red. The benchmark indices struggling to maintain their levels. Nifty 50 just about holding above that 25,000 level. Down almost 3/4 of a, 3/10 of a percentage point. Meanwhile, Sensex just about in the region of about 81,700, finding it really hard to climb up to those 82,000 levels. Remember, tomorrow is going to be exactly 1 year since Nifty and Sensex touched their lifetime highs. No real recovery for investors so far. Meanwhile, let's look at the Nifty 50 heat map and try and make sense of the advanced decline ratio, which seems fairly negatively inclined this morning. You're seeing massive profit booking in the entire auto pack. Tata Motors is down about 1.4%. Mahindra is also down about 0.3 of a percentage point. In the auto pack, Maruti Suzuki seems to be the only gainer this morning. Meanwhile, look at the IT sector and investor confusion, investor fears potentially over what is going to happen with respect to the H1B visa continues to to play and weigh in on investor sentiment. So the IT stocks once again opening in the negative. Infosys, TCS, HCL Tech, Wipro and Tech Mahindra all in the negative this morning. In fact, Wipro and Tech M down more than 1% or so. Let's unpack all this and the mood to expect from the market in the next few days. Rohit Srivastav joins us this morning. Rohit Srivastav, founder and market strategist, IndiaCharts.com. Thank you so much for your time this morning and pleasure having you back with us right here on News 9. Not a great start for markets, and you're seeing pretty much every stock, every sector in the red this morning. What are investors fearing right now?
Well, I think a lot of it is the overhang from the recent news flow around H1B visas, tariffs for the previous overhang. So we've sort of not gotten over it despite the news around the GST trigger that could, aid some parts of the market. But how I would look at this is really that the markets become slightly fractured when you look at performance across sectors. We do see, some segments of the market doing well over a period. Like if we take a 1 month view or a 2 month view, then you'll find that certain segments of the market have actually outperformed while others have lagged behind. So I think that divergence is something that we need to seriously take into account and, consider investing accordingly. So there are sectors you're going to avoid, there are sectors you're going to be with. And I think the correction should be more or less getting to the end of it. It's fallen for 4 days and we are sort of back to where we were on the 15th of September. So I think the downside somewhere is going to be limited. And we will see a pickup in the momentum again as we enter the festival season.
So there should be some momentum as we head deeper into the festive season, which began with Navratri on Monday. But what are you making of the consumer durable sector, Rohit? Because one would anticipate that this is a sector which is poised for great revenue uptake in the festive season. Are we just seeing profit booking, or is there some sort of a fear that perhaps this rally is going to be short-lived when it comes to consumer demand?
No, I think the market pretty much ends up anticipating things well in advance. So if you look at the moves we've seen in parts like the auto segment, for example, the two-wheelers, that's actually ended up happening well ahead of, the festival season. So we've seen one rally. I think you're just seeing some profit booking over here. It will not change the overall outlook on a 3 or 6 month basis because you do have lower interest rates, which also further help that segment. So I think it's only a temporary setback, or rather, like you said, profit booking because there have already been significant gains since the announcement of the GST.
Is that the sentiment even on the consumer non-durables, the FMCG pack? Because even the FMCG pack seems to be completely wary of what is the path ahead? How much is it going to really, lead to a valuation gain? So again, are we seeing profit booking? Because this was one sector we did not see rally as much as the consumer durables segment. So what do you make of the FMCG space right now?
The FMCG is typically a defensive sector. So, it picks up only when markets are very, very poor. If you actually look at June and July, when the market was falling, the FMCG stocks were going up. Now you're seeing the contra of that as markets have picked up a bit. You're seeing profit booking in the FMCG segment. Overall, if you look at FMCG, they were the top performers of the last decade. They are most likely not going to be the top performers of the coming decade. And therefore, while you might see an uptick, I don't expect aggressive buying in that part of the market. So it's really going to be focused more on the discretionary spending rather than, the FMCG part where, valuations being high, growth being sort of on the margin. You can't really expect exponential returns there, but I guess they will move along with the market. But right now, I think it's because they went up when the market was going down that you're seeing the reverse trend.
Now shift focus to the tech services sector, which is, of course, the most impacted when it comes to the H1B visa issue, which, Rohit, you also spoke about just now. Now, if you go beyond, let's say, just the Nifty 50 tech space and look at the entire Nifty 500 space and the entire tech sector there, the trend seems to be that the mid-cap stocks like Persistent as well as Coforge seem to be losing a lot more ground than the blue-chip stocks of Infosys, Wipro, Tech M, etc. So, overall, do you think the rationale behind that could potentially be the fact that these are the companies that would have hired more aggressively in overseas markets? And there seems to be some sort of a saturation when it comes to the blue-chip stocks which are already operating in a market like the US.
So, yeah, you really have to deep dive into what what is the number of people that each of them are employing in the US versus how many work out of India. A lot of the bigger companies have reduced their count outside, long back when there were H1B visa issues in terms of number of visas that they were actually limiting based on certain restrictions. So I think some of that containment was already done. Having said that, tech as a sector, has been growing far slower than many other growth parts of the market. So, when it comes to asset allocation, you seriously have to think whether you want a significant allocation to tech or not. I think the only time we saw a significant rally was 2021, during COVID, when a lot of work had to be outsourced or done from home, and, the tech sector got a boost. But when you really look at the long-term trend of tech, you see the pace of earnings and the margins declining over a period of time, over a 5 or 10-year period of time. And that is where, from a long-term perspective, I don't really see it as a significant place where I want to, park money.
All right.
Because it would end up underperforming relative to growth.
All right, Rohit Srivastav, let's leave it at that for today. But thank you so much for your time and for joining us here on the Morning Brief at 9. Pleasure having you.
Thank you.
Let's continue a little further with that H1B story and its impact on not just the IT sector and its earnings, but even the employees as well as potential employees which would be joining India's IT sector. Now remember, America has slapped Indian tech with a $100,000 reality check. That's the new price tag for an H1B visa application. And while the move is sparking panic among professionals as well as some students who would be graduating this year or the next, there's another side to the story, one that could turn this into an opportunity for India's GCCs or the Global Capability Centers. Now, let's look at what's happening. American banks, including Citibank, JP Morgan, as well as Goldman Sachs, have signaled that they'll lean more on their India hubs to sidestep the soaring visa costs. Now, some analysts are calling India's GCCs the workaround engine for corporate America. Meanwhile, remember, Delhi had hit back saying Washington's policy reflects a fear of Indian talent. The US later clarified that the application fee hike applies only to new visas and not to renewals of visas of professionals already working in the US. Now, there's a trade-off. On the one hand, India's GCCs could see an accelerated shift of high-value work, which could include functions like R&D, AI, cybersecurity, as well as product design and engineering, all moving to cities like Bengaluru, Hyderabad, Pune, as well as Noida, which are booming hubs of GCCs. But on the other hand, there's a flip side as well, where IT majors are warning that as much as $150 to $550 million of extra immigration costs as well as short-term margin pressures could hit them. Now, some client-facing roles simply cannot be offshored is the warning coming from IT companies. Experts that News9 has spoken to suggest that the mid-cap IT stocks who are just about acquiring more clients in the US would be hit harder than the large-cap blue-chip companies, ones that already seem well-staffed overseas, especially in the US market. So, is this protectionism gone too far or an inflection point for India's tech powerhouses? The answer may lie in how quickly our GCCs climb up the value chain from back-end delivery to frontline innovation. Now, one thing seems fairly clear. America's visa shock may just hand India's GCCs their moment. But the question is, can India clinch it? Let's discuss this with Rakesh Khar, editor News9, who joins me this morning. Good morning, Rakesh. Pleasure having you here with us on News9. Now, is this an opportunity in the making, the H1B soaring new applicant visa fee versus the possibility of GCCs scaling up and getting clients in the US to offshore more work back home here in India?
Good morning, Karthik. It indeed is an opportunity, but GCC, as you know, has been a story in the making, and it's a great success story that India has adapted in the last decade or more. And the potential outlook for the sector is extremely bright. We're looking at about $110 billion by 2030, which is currently at about $65 billion, with about 1,800 or 1,900 GCCs mounting to about 2,500. But to fast track this outlook, would take a lot more than a positive intent. We need to be working closely with top American companies to get them to see value in the Indian GCC, because as we have noticed and as you pointed out in your report, that the banks already have signaled My worry is that, the Trump administration, given its current state of mind vis-a-vis India, could also look at creating some kind of challenges for offshoring such kind of activities. We hope that doesn't happen. In the meanwhile, GCC is indeed, it's a fillip for the sector. And the other interesting piece here is that, Karthik, the GCC is already, have a point of view in regard to the employment of talent, which is in the middle and the upper level of the echelons of the tech companies. While as the bulk of India's tech story rests on the bottom of the pyramid, as we call it, or the value versus volume game. So the top talent would still be, so to say, retained by American companies, paying that hefty fee that Trump has imposed. So what happens to the main bulk force of Indian IT story, which runs the huge challenge of getting into a very, very gray zone. As it is, we've been arguing between both of us, and we raised this issue with the IT minister also at our WITT summit. Looking back, we've not been able to, so to say, reimagine our IT story. We have a grand success, say, 20, 30 years ago. It needed to be reimagined from both value and volume perspective. It needed to be reimagined from the business landscape, because we never know what kind of challenges would come. Nobody would have thought that this hefty penalty would come in, but it has come in now. And then this is a new paradigm which is creating massive trouble for the Indian IT sector. One little window of opportunity there is, because again, it's a geopolitical, geoeconomic story, is from October 1, 2025, China, seizing the opportunity, has, so to say, hugely liberalized its visa policy. To the extent that you don't even need a Chinese employer to call you in there.
Right.
They're almost a free entry. So this K visa versus H1 is an interesting play for the larger middle of the Indian IT story, where we can look at immediately shifting gears and moving there.
Right.
Back to the CC story, I think Government of India has, so to say, committed itself to investing heavily from the policy framework. We need to take it deeper to tier 2, tier 3 cities, where the cost advantages will come in, and also see that we are able to bring in top talent. And not just that, we also need to create opportunities for the lower end of the talent in GCC. Then possibly we'll be able to mitigate the challenge as it has come.
All right, Rakesh, a lot of points that you've made, all valid ones. I want to pick up one or two of them, given the paucity of time, and go a little deeper into them. The first point that you mentioned about the fact that Donald Trump could throw spanner in the works of more US work being offshore to India. Now, what GCCs could potentially do is pretty much the reverse of what Donald Trump wants to happen. Because at one point, Donald Trump wants more investments, overseas investments coming into US. But if you're looking at GCCs flourishing in India, it calls for reverse investment. US companies investing here in India. How big a problem do you think that could be for Donald Trump and his policy?
It merited a case for a policy framework. Trump and his administration is working in an environment where there's less occasion for merit and logic. There is more occasion for, emotion, and, it's all tied up to the MAGA sentiment, whatever that means. So in that sense, I wouldn't be completely surprised. That's why I mentioned an offshoring penalty, because he doesn't want American capital to move left, right, center. He doesn't want American talent, which doesn't really happen in the big way. I mean, the fact of the matter is that all of us looked at America as the big destination to go, because it was the most secular platform to invite talent from all over the world. And happily for India, sadly for India in a way, looking at it in terms of brain drain, but happily that we hosted the talent in America, hosted India's top tech talent. So there are concerns that America sees, which are more in the emotional zone. So I am not totally convinced that he would see merit in what he is doing.
All right. I want to touch upon another point that you raised, and another very valid point, Rakesh, and this comes from the fact that GCCs are looking at middle-level and top-level talent pool. However, those who graduate from engineering colleges typically start off as coders, move to the US. So while for tech companies who operate overseas, it's a great cost arbitrage, also for Indians who migrate to an economy like the US, it's better quality of living, it is better salary, and more income, more remittances coming back to India. All of that now has a big question mark, because even if GCCs are able to afford that talent at the bottom of the pyramid, like you called it, Indian GCCs will not be paying them those salaries, and will our cities be able to accommodate the new talent which is going to occupy those seats and also occupy real estate in these cities?
Well, I mean, fundamentally, if you, imagine a GCC, it is not the seat for, entry-level talent. So, it defeats the purpose of a GCC. GCC is essentially R&D, innovation, high-level capabilities. That's why it's a global capability center. And it's more a corporate aligned function than a client-facing function. So I don't know whether we have a solution there. That's why I mentioned China, which is a potential solution where, we could park our entry-level plus talent into a zone where, they don't feel frustrated. And we also signal a new relationship, between China and India in the economic framework, which has been talked about at the policy level, both by the Prime Minister and, so to say, the Commerce Minister and the External Affairs Minister.
And let's stick on for just another minute on this Chinese K visa, which you're saying could be an opportunity for India's coders, the fresh pool of talent that enters the workforce every year. Now, wouldn't the problems in China be pretty much similar to the problems of absorbing them here back home in India? Because at the, if Indian IT companies are looking at servicing US clients, US's problems with India seem to be similar to US's problems with China. So at the end of the day, the entire offshoring model, whether these new employees work out of an India office or a China office servicing a US client, those would pretty much stay intact, wouldn't they?
I don't know. You'll have to really weigh, US's approach to China versus India. Unfortunately, as of date, India seems to be at the, most receiving end versus China. Of course, yesterday also Trump mentioned China and US, but China and India in the same breath when it comes to Russian oil. But he also brought in EU. So my view is that we should not block our view from the K visa opportunity. And we should see it as an opportunity. And it could, apart from the US companies, there could be other opportunities also. And maybe Vietnam, Philippines, which anyway are, a competition to India in terms of this talent in the tech sector. So we'll have to reimagine ourselves. As I mentioned, at the macro level, it's our failure collectively to reimagine our tech story, given its very, very strong initial success. Any template which is successful needs to be reimagined every 5 years, leave alone a decade. My view is that, I may be a little bit of a pessimist in this case. We haven't been able to seize the opportunity and reimagine every 5 years. We haven't done that in a decade or two as well.
Right. In fact, the IT story has well long lived its and beyond lived its few decades that Rakesh is talking about. But Rakesh Kar, thank you so much for joining us here with this Input on Newsline. And we will slip into another very short break. But coming up on the other side, the GST bonanza for the auto sector. We'll understand where it goes from here. You're watching Newsline.
Alakazam fish disappear. Monday.
Smooth, silent, seamless. Sliding systems from headache.
Mumbai, brace yourself. The GOAT or Bakra of satire is back. Cyrus Brocha. From politics to pop culture, from your WhatsApp forwards to breaking news, nothing and no one is safe.
Relax, guys, relax. I only roast the truth, and the truth is always hilarious. Too much pressure.
Get ready for news caustic, bold, sharp, unfiltered, 100% Cyrus.
Welcome back. You're watching Morning Brief at 9 right here on Newsline. Let's dive now, or rather drive now, into a segment that is really in an overdrive when it comes to sales. Well, consumerism seems to have gone into a frenzy on the very first day of Navratri, which has coincided with the first day of the new and reduced GST rates. Now, Tata Motors has reported record sales of 10,000 passenger vehicles on Navratri's first day, boosted by reduced vehicle prices after the GST reforms. But Tata Motors is actually not the highest selling car. The highest selling car on the very first day of Navratri, coinciding with the GST cut, is Maruti Suzuki, which has sold as many as 30,000 new cars on the very first day, followed by a very large margin by Hyundai, which also saw strong sales, selling as many as 11,000 units respectively, again owing to the lower tax rates as well as other discounts which have been offered by auto consumers at the start of this festive season. Remember, petrol hybrid, LPG and CNG variants under 1200cc and a length shorter than 4,000 millimeters or 4 meters are now taxed at 18% instead of 28%. Meanwhile, diesel and diesel hybrid cars with engines up to 1500cc and a length up to 4 meters also enjoy the same benefit. Let's try and put this into perspective and see how likely it is for this rally to last when it comes to car sales. I have two very special guests joining me this morning. My colleague Amit Ranjan Kumar, News 9's executive editor. I also have senior auto journalist Sumit Chaturvedi joining me this morning. Amit, to you first. I mean, we've seen the data, 30,000 cars being sold by Maruti Suzuki on the very first day, 11,000 by Hyundai and 10,000 by Tata Motors. Just these three players together have sold as many as 50,000 cars, when the average monthly run rate of selling cars is pretty much this number. Is there more data that you want to share with us?
Yeah, so this is what was sold. Let's look at where the trends or the mood of, to borrow the cliche, mood of the nation lies in this segment. Cars24, the online car store, reported a 400% surge in car deliveries just by 2 p.m. on the first day. Maruti Suzuki sold 30,000 cars. They got inquiries as many as 80,000, which was a 50% surge over a typical festival first day on any other year. Tata Motors, their biggest sales were in Punch and Exxon. They sold 10,000, but they got 25,000 inquiries on the very first day on different cars. Hyundai, 11,000 was the record they have ever touched or crossed in any festival since they have been in India. So that is where the mood is, and it doesn't seem to be dying down going by these kind of numbers.
Mood of the nation, as you put it, pretty much being driven by this frenzy of buying cars. Sumit Chaturvedi, you've been following the sector for decades, and one would pretty much argue that there was a hope and there was this expectation that car sales are going to go through the roof. But 50,000 car bookings by just the top 3 brands operating in the country. Unprecedented, one would say. But as you speak to car makers, many of them also saying that in the first 8 days of Navratri, they will pretty much surpass all records ever held. But when you're speaking to them, do you believe or do you understand that this is going to be a very, very short-term, short-lived phenomena which may not last beyond Q3, that's the October to December period?
Well, you're right there, Karthik. It's all going to be lasting for this period for some time, because again, this is combination of Navratri, GST rate cut, initial demand that is coming. Well, that is going to be here for some more days till Diwali. We will see. Again, it will bring down, the whole sales can be coming down in December period. So it has to be seen whether it's a long term, if this can be sustained or not. It looks like this is, it's been long that pent-up demand was also building up. Remember, the day the GST cut was announced, 15th of August, by Prime Minister Modi, the sentiments were there that people will buy now whenever the GST rate comes into effect. So that time also, the buying was not happening. That pent-up demand has also come. So you're absolutely right there. It's to be seen in complete picture, in holistic picture. How are the sales? One day good bookings and other day not having so much good bookings is also going to be flat or maybe compensating for each other. So we have to be really seen. However, automakers are leaving no stone unturned to really go and bring buyers to the showrooms and deliver them cars, because that's what they have been waiting for. Remember, post-COVID scenario was a scenario when we saw the sales going through the roof. All cars were having very good demand, but car by nature, you don't change every 2 years. It happens once in maybe 5 years. So that is why we have to see if it is long-term phenomena when the car sales are stabilized, or it's a short-term blip. That's what it looks like. So we have to be really seen by the end of financial year whether it sustains or not.
We will know, and not just by the end of the financial year, maybe even a few years beyond that. But Sumit, car companies have also been, if I can put it mildly, notorious in never slashing prices. Even if you remember in the immediate post-COVID recovery era where input cost was high and semiconductor shortage was pretty much plaguing the sector, they increased the prices. And after that, when the supply chains were fixed, the prices never really came down. So do you think this time around also, once the festive season is over, once this frenzy, this excitement of GST rate cut is over, gradually prices are going to inch up to the levels that they've been at before this GST cut?
Well, absolutely, Karthik. In a way, the car market is cyclical form. In January, it is going to happen because in January, the new models come with the new 2026 year. So their automakers will definitely go for a price hike. Every time I've been seeing since years, every December, they plant news saying that we are going to increase prices. In January, well, that is delayed by a few months, but that happens in every year beginning because the demand is there for new cars as well. So we will see in December the car sales will come down because people will wait for January models. Car makers will eventually go and raise a bit of the prices. Look at the profitability of Maruti Suzuki, the way they are investing, Hyundai. So all of them really will not leave any stone unturned to make good money. So in January, yes, there could be more increase on prices of the cars. Well, for the next few months, they will till December, they will keep on giving discount as happens every year, combined with Diwali, Navratra and GST rate cut.
All right, Sumit Chaturvedi, thank you so much for your input and your perspective here on this story. Well, let's see what happens post-December once the festive season ebbs out and the new calendar year begins. New models get launched. Will they come with a new price sticker or not? We will bring you that story come Jan. But Sumit Chaturvedi, thank you so much for your time. Meanwhile, it's not just the auto sector. Not to be left behind are also the white goods segment, which have also now witnessed a sharp surge in bookings, as well as sales on Monday, as GST on items like air conditioners, refrigerators, washing machines, dishwashers, as well as large screen TVs have been reduced from 28% to 18%. While prices of split ACs have come down by 3,000 to 5,000 rupees, high-end TVs have seen their prices get slashed by up to, well, hold your breath, as much as 85,000 rupees in case of some luxury televisions. Now, Amit Ranjan Kumar continues to be here with me. Amit, the story with let's say, all the white goods, the consumer durables, not just limited to auto, but also two big online sales on right now. The big discount days on both Amazon and Flipkart have also kick-started. So overall, what are you picking up when it comes to white goods as a category?
Yeah, so like you mentioned, the big two, Flipkart has launched what they call, they branded what they call their festival sales as the big billion days. And they expect inquiries and hits on their site to go up to almost 250 to 300 million this festive season. Amazon has launched the Great India Festival. Now, analysts expect a 27% jump in online sales this festive season. And already they have recorded in some segments hits up, jump in hits and sales up to 32 to 35%. That is from what the festive season recorded last year and the year before that. So that is where, again, borrowing the cliche, where the mood of the nation in white goods and consumer goods is going towards as well.
All right, Amit Ranjan Kumar, thank you so much for that input. I'm sure you have your cart also ready to go and check out a good deal, not just with the GST cut, but also the big sales online. But we'll discuss that after the show. Thank you so much for your time today. And finally, food delivery major Swiggy will sell its stake in Ropin Transportation Services, the parent company that operates bike taxi startup Rapido, for a total consideration of about 2,400 crore rupees to Process affiliate MIH Investments and to Westbridge Capital's Setu AIF Trust. Now, the sale marks a reversal of Swiggy's 2022 bet on Rapido when it led a $180 million funding round at a valuation of about $800 million. JP Morgan has given a buy rating for Swiggy. Meanwhile, the news not just coming from Swiggy and Rapido, there's also news coming on PVR Inox. The Karnataka High Court yesterday stayed the state government's controversial move to cap cinema ticket prices at 200 rupees across all theatres, including multiplexes. Justice Ravi V. Hosmani passed the interim order while hearing petitions filed by multiplex owners, film producers and a shareholder of PVR Inox who challenged the Karnataka Cinema Regulations Amendment Rules of 2025. In another move, PVR Inox has reduced the cost of its Blockbuster Tuesday tickets to 95 rupees including GST from September 23rd. Now, the cut from the previous 99 rupees comes after a revision in the GST slab for cheap cinema tickets. According to the new tax regime, tickets that cost 100 rupees or less now have 5% GST compared to 12% previously. This reduces the minimum price for the Blockbuster Tuesday tickets to 92 rupees and adds 5% to the ticket to price it now at 95 rupees for customers and moviegoers. And with that, it's a wrap on this edition of Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9, so stay tuned.
Light, camera, and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week, don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's Page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.